Hello, good afternoon, everybody. Welcome to Cover webinar, where we're going to explore cyber risk management for healthcare executives. Before we begin, I want to give you a little bit of an introduction to those of you who might not be familiar with Cover. Cover is an expert in the field of financially quantifying cyber risk. We've been around for about 5 years, and we started and continue to serve a range of clients, both in the insurance and reinsurance market, where we power cyber underwriting and exposure management solutions for some of the largest carriers in the world. And we also power a range of enterprise-specific products, where we help C-suite executives understand and financially quantify cyber risk. My name is Tom Boltman. I'm the VP of Strategic Initiatives. I'm based in London. And I've been with Cover for approximately 5 years. And I'm going to introduce you today to the field of financial quantification of the cyber risk. We have a couple of objectives that I'd like to state before we begin. The first thing is I want to introduce you to and help you to understand some of the cybersecurity decisions that are evolving into cyber risk management decisions. There is a shift going on, and that what was typically a focus just on security decisions now actually encapsulates a whole range of other decisions under the cyber risk management banner. The second thing I want to do is to explain just how important financial quantification is in unlocking this world of different decisions that you want to make in order to help your enterprises, and in this case, healthcare enterprises, become more cyber resilient. The third thing that we'd like to achieve is to demonstrate, both through the methodology that we apply and through the products that we deliver, a bit of insight into how healthcare executives can use tools like the one that Cover powers to help improve the way you do your HIPAA security rule submissions, and as well establish and meet other KPIs using an on-demand, technology-led, data-driven approach. Before we begin, I think it's important to state that the global economy today, with $88 trillion in trade, is actually powered almost entirely by technology. Every company, over 150 million businesses, are in some way dependent on the technologies that they're running on and on the supply chain that itself is powered by technology. And so if there were to be a disruption or an interruption in anywhere along this chain, it could cause severe and painful financial losses, and of course, a whole range of other impacts that we can discuss in a moment. Specifically, when it comes to cyber risk and healthcare, though, I think it's important to look at a couple of trends that are emerging. Firstly, is that the breaches that are happening within the healthcare industry are growing exponentially. Where there was 14 million different victims in 2018, we're now approaching 50 million, or perhaps even more than 50 million in the year 2022. This is a huge advance, and of course, this incurs potentially huge losses and reputational damage for the healthcare providers. And the focus on ROI, what is driving this behavior, is actually very, very plain to see. Because when it comes to healthcare, there's a real disparity in the options and the incentives available to different attackers. We can see that a healthcare record itself is worth maybe 50 times the amount of a different type of information, a credit card number or a social security number. And this means that the incentive for an attacker or for a malicious group to actually focus specifically on a healthcare provider is especially acute. And of course, we couldn't really talk about cyber risk today without mentioning ransomware. And the huge sums of money, of course, this relates to just payments for the ransom. We're not talking about business interruption or liability or other losses that can be incurred through a ransom, are in the tens of billions, just when we look at healthcare organizations. So it's clear that there's a lot of focus on healthcare, and we can see that the incentive and the losses are, laying a foundation where businesses and executives now have to take special attention in how they're going to manage it. One case study that I thought was particularly interesting was one affecting the University of Vermont a couple of years ago. And in this case, there's reported to have lost approximately $54 million. The most interesting thing, and this was a ransomware attack, was that this money, this huge sum of money, actually didn't come from paying a ransom at all. In fact, they didn't even lose any data. This was purely down to an interruption in the business and the loss of income that comes with it. And it took them weeks, almost a month, to actually get back online. So here we can see that there are different dynamics and different types of impacts beyond what you would traditionally think, even with a classic ransomware example, that make the impacts of cyber risk especially important to understand. Of course, we can reason from this that should the attacker in this case been more successful, had been receiving the ransom payment and had stolen data, they could have been in for a much higher loss itself. So if all of this is happening today, if these losses are occurring, if all of these threats and issues are growing, what is stopping us getting to grips with it? Why do people generally feel a level of underconfidence when it comes to managing cyber risk? And today, one of the central issues that we help our clients meet is the issue of communication and managing the cyber risk. Specifically, when we look at boards, CROs, and the CISO, they actually struggle to communicate with each other. They are often stuck in, technical analysis and description of what's going on. And that can make it hard for people with a non-technical, non-cyber background to understand. And so the role of financial quantification, as we'll establish later on, is helping bridge this technical gap. And it also does so in a way that contrasts with other approaches to financially quantifying cyber risk, which can tend to be very consulting-led engagements, which are slow, expensive, can often be very, very subjective and often overly simplistic. And so what we need to have, and what we believe is the most important thing for an organization to do, is have access to a technology-led, data-driven approach, which continually adapts to the changing world of cyber risk, which is constantly evolving. So we believe that there is a shift occurring, and this mindset is especially important for executives at healthcare organizations. Specifically, the shift that we see occurring is one that it moves from a cybersecurity position to one that evolving into a cyber risk management position. And the shift is being accelerated and driven by a number of trends. Firstly, of course, the wholesale transformation and dependencies on technology and third-party service providers. Secondly, of course, is the increase in both the frequency and the severity of cyber attacks and failures of those third parties. And of course, especially in, and of course, this differs by different geographic region, is the role that regulators are playing, that they're much more actively involved. And of course, you have things like in the US, the HIPAA security rule as an insight into where this market is going. And of course, we believe that this will only intensify over time. So let's dig into this. What is this new world of cyber risk management and how does it differ from before? So the first thing I think to recognize is that actually cyber risk management involves a whole range of stakeholders that need to work together as a team. Traditionally, the CISO has been the cornerstone, and in many ways will always be the cornerstone when it comes to dealing and managing cyber risk. But the truth is that there's a wider set of stakeholders in the C-suite, be it the chief risk officer, the CIO, the board, the CEO, that are now being pulled in by regulatory requirements or by the requirement to perhaps take insurance coverage, and they need to understand what is this risk and how are we managing. So financial quantification, the first thing that it does is it actually unites all of these stakeholders and allows them to communicate with each other. Once they're able to communicate in unified language, they're actually able then to make a whole bunch of decisions in different areas, whether it be governance, risk management and compliance, whether it be around insurance and risk transfer decisions. Of course, one of the central use cases that we help clients understand is how to make different cybersecurity investments and understand the ROI of those investments before any money is spent. And of course, there's a whole range of transformation and training products, which also fit around building a cyber security culture in an organization. Each of these decision areas, though, the truth is they actually break into a whole load of different decisions or use cases. Of course, there's the issue of reporting to the board and making sure that you're making progress and communicating that progress. The issue of capital management is becoming increasingly more important. One example of that, by the way, is that the dual forces of the hardening insurance market, meaning you can't always get the coverage that you want at the price that you want. And you may have exposure to things like ransomware, where the insurance itself doesn't even, it excludes those kind of payments. And therefore, you may understand that you have an exposure to ransom, but you may not have the traditional insurance coverages to pay for it, and the mitigation will never wholly solve this. So you therefore have to be aware of the capital implications. And of course, the broader range of capital allocations are important when it comes to looking at budgets and so forth. So we help in all of these different ways and make these decisions, but in a financially quantified way. And this is the bedrock, the future of having a comprehensive strategic view of how you're going to manage all of the different cyber-related risks that come and could affect the healthcare organization that you're managing. And this is what Cover does. We transform cybersecurity data into financially quantified cyber risk management decisions. We do so at scale, meaning we can work with organizations of any size, any complexity, and we use technology to do this, in contrast to a consulting-led approach. And this allows us to, on demand, at the click of a button, be able to financially quantify in an actionable way the different decisions that you need to make, when you need to make them, as things change. So what I want to do now is I want to establish a very high level overview of the kind of data inputs that go into such a thing. And then we're going to walk you through how we apply that in reality. So the first thing one needs to do is, of course, understand the organization. And we work with organizations which are, some are over $100 billion, $150 billion in revenue, hundreds of subsidiaries, globally distributed, multiple industries. And you need to understand what is this organization and how it's doing. And so we have huge experience working with these large organizations, and of course, understanding what they do and how they work. The next thing, of course, and this is the heart of the Cover approach, is bringing in huge volumes of different cyber intelligence, whether it be attack surface management data, whether it be connecting the internal security data that the organization has for its SIM, XDR, EDR, and so forth. And of course, connecting it, and I'll talk about how we do that, into the global threat intelligence picture, and of course, understanding what's going on in the broader market as well. The final thing, which is very interesting and perhaps slightly different as well, is the way that we use insurance data, insurance intelligence. And that's because, as I mentioned at the beginning, Cover itself powers a huge range of different solutions in the insurance market. And it allows us to continuously validate the different models that we apply to make sure that they are performing as required, and have a understanding of the different dynamics that are taking place within the markets themselves across organizations of all different sizes, and use and factor in the role of claims data. So taking a fact-based approach of the different losses that organizations are suffering to help deliver a more evolving and fact-based way to understand the potential financial losses that could affect a business. So let's take this now and let's kind of go through a use case and show how financial quantification could support the way that you're meeting your HIPAA requirements. So the first thing is, let's have a look at the security rule and understand some of the things that are being asked of an organization. And they range through, they sound quite straightforward, but actually these are quite hard to do. First is understand the scope of what you're doing. Well, these can be very complex organizations across multiple jurisdictions, regulatory regulators, and of course, the ability to then break down per organization what's going on can be a challenge. The next thing is to understand, different levels of granularity, the security measures that are in place to mitigate this, and then determine the likelihood of threat occurrence and the impact of this threat occurring. Now, these typically have been done in the past in a qualitative way, and this runs the risk of being very narrow and potentially missing huge parts of the risk that could affect your organization. And so later on, I'm going to talk to you about how we use data in a continuous way to meet this. After that, you then need to, of course, show the level of risk, and to do that, ideally, you need to show the exposure that you have, and then show what you're about to do with it and be able to redo this assessment. All of this is very hard to do manually, and as many people listening will understand, it can take huge volume resources and manpower in order to have a view on this. So I'm going to talk to you about how a technology-led approach can help with this. The first thing, as I mentioned today, is to first do what we call the cyber risk analysis phase, which is to understand the cyber attributes and profile of the business. And then, of course, turn that into business impact and communicate it in financial terms. So the first thing, as I mentioned today, is understand the organization. So we think it's important to be able to have control at the level of analysis that you think is most appropriate, whether that be the group level, understanding what's happening to all of the organization, wherever it may be, but also have the ability to break it down into individual subsidiaries, no matter where they are, and deliver a financial quantification and plan for each of those subsidiaries. And so this is the first thing that we do. We establish, how much of the organization are we going to analyze. For each of those entities, then we will then inject in huge volumes of data, whether it be from an attack surface management perspective, looking from the outside in as an attacker would look at your organization, but also integrate all of the cyber intelligence that you have contained within your internal data sources, whether it be by connecting your SIM, your XDR, and so forth. Here you can see a partnership that we have with Microsoft and to leverage all of the Microsoft security data that you may be using and use that to ingest into the models to give an accurate, evolving sense of the cyber posture of the business. The most important thing here, though, is to understand that we're trying to understand all of the technologies that the business is running on, all of the third-party service providers that the business is working on, using the assets, the networks, the patching cadence, and so forth. Once we do this, we can populate a visual view of the enterprise and how it's exposed to cyber risk. So for the first time, you can understand all of the different technographic, regulatory, different types of sensitive data and criticality of these different assets in a visual way to understand what is the organization that we're about to analyze. So from the first start, we've now just looked at the first 3 points of the HIPAA requirement, and we've shown you how using this approach and using a seamless data-driven way, we can help support those first 3 criteria. The next thing that we do, though, is slightly different to others, and we ingest huge volumes of global threat intelligence. This helps us understand the different tools, the different techniques and tactics that are evolving in the intelligence world, cyber intelligence world, to help us understand all the different incidents that are occurring. And this is super important because this is how we actually get a data-driven, quantitative understanding of the frequency of events that can hit that business. And the way that we do that is by parameterizing the different characteristics of each of the incidents that we see happening in order to understand distributions of likely technology exploitations and third-party service provider failures that could occur. And then we connect it back to the technographic profile that we have of the business. This enables us to deliver an evolving view of a specific range of events that could hit that business, and most importantly, be able to answer the question of how frequently we believe they are to happen in the next year. After this, and this, of course, is one of the key things which is today done in a largely qualitative way, and then we show you how you can use data to do it. The next thing that we do is we apply multiple cyber risk models to analyze this. And the reason why we use multiple models and not a single model is because we've come to learn that cyber risk itself isn't just one big monolithic problem. It's actually multiple problems that need to be solved in multiple different ways. For example, you can have events which are specific and targeted in nature. This is your classic data breach examples like Equifax and Marriott come to mind. And in the case of Marriott, actually, this is what they were sued for. So they could have had a multi-billion-dollar loss had the judgment gone a different way with them. But you can imagine the kind of exposure that healthcare providers are exposed to when they are holding huge volumes of sensitive private health records. And therefore, the types of liability that they could be exposed to and losses, is potentially very, very large. The key thing here to understand is that these losses are derived from things which are targeted or specific in nature, meaning they don't affect other businesses. They are based on an exploitation of a vulnerability or so forth opportunity within a given organization. In contrast to events which are systemic in nature. These are your NotPetya's, your WannaCries of this world. And what characterizes these events is that they can hit multiple companies at a single point in time. They create a so-called viral cascade that washes across whole industries. Now, this is very important, especially if you're a larger organization with multiple subsidiaries. And the key thing that drives these systemic events is either the exploitation of a commonly used technology, be it a database technology or an operating system, for example, or the failure of a large service provider, for example, like a cloud provider. These are the two things that drive systemic losses. And the key thing is to be able to automatically differentiate between all of these different types of events that can hit your business, and most importantly, be able to communicate them in a simple way, because this provides the building blocks of not just in financial terms, but in just normal, best practice communication of understanding what actually is the mechanics of cyber risk. For example, we've learned now that it could be the attack or a failure. It could be a specific targeted attack, but it could also be a systemic event that affects the business. All of this is very helpful in helping that broader range of stakeholders come to grips with the different dynamics that can cause a cyber event. So once we've run all of these models, we actually then come to a very important point. And this is a central point that I think executives need to aim for to begin with. And that is an understanding of the overall exposure to the entire organization. Because once you've established what that North Star metric here, that high exposure, you can actually then create different strategies to either mitigate it through investment and controls, to transfer it to insurers and risk transfer mechanisms, of course, to accept it and so forth. But the key thing here is to have a plan. And what you can see on the right-hand side where it says loss drivers breakdown is actually you can see what's driving this high exposure. And in this case, it's driven by three core things. It's being ransomware, it's through third-party liability, and it's through data theft. And through platforms like the Cover Quantum platform, what we would enable you to do is to identify what is really driving the losses that are specific to your business, its makeup, its technographics, its location, its industry, and so forth. But then understand how to implement a plan to reduce those core drivers. It allows you to be more strategic in how you're allocating resources and where you're applying focus. Of course, we then allow you to break it down, and we do something called impact scenarios. This allows us to provide a comprehensive view of all of the events that could occur. And this is super important because in reference to the point I made before about other approaches being perhaps a little narrow in how they look at it, we take a view of all of the events that could happen and then understand that not just that they could be triggered by 1,000,001 ways, but how they end. It's the end that matters. It's the impact that matters. So we recognize that one event, and we model that one event can have multiple impacts. And here you can see an example of us showing you where those impacts lie. So that from that point, you can then start to carve out different strategies and tactics to reduce the core drivers that are affecting your business. The next part, though, I think is super interesting because one of the key things, the questions that we answer for our customers today is around explaining and most likely justifying budgets and programs that the CISO and their team wants to implement in order to reduce the risk to their business. However, because of the abstract nature that a lot of these discussions are taking, that can be challenging. So here, what we enable you to do is, based on the evaluation that we've done of the business at that point in time, we allow you to see a set of recommendations that show you which controls, in this case it uses the CIS, but it could be the NIST framework, about what controls you should either introduce or mature in order to reduce the overall exposure to the business. And here you can see on the right-hand side what impact scenario it's affecting. So it can perfectly align to the KPIs that you're trying to achieve. But most importantly, it shows you what is the reduction in risk before you spend a penny, essentially allowing you to push and establish what is the ROI of the investment that you're making. So this actionability, this ability to take all of this modeling and all of this, high level understanding of the exposure of the business, but then make it actionable to reduce it, is key to being able to establish a proper cyber risk management program. Of course, the other key pillar is around transferring risk away. And so because we can understand both the overall exposure and the different likelihoods of these things occurring, we can also deliver insight into helping organizations get the limits that they require, pay the premium that they're meant to be paying, perhaps advantageously because you can show what you're going to do to lower it, and have a better, more empowered conversation with your insurer or your broker. But also, of course, the deductible, making sure that it's, you're not paying a higher deductible than your low exposure. All of this helps empower decision-making across the CRO, the CFO, the CISO, so they can have a fully aligned understanding of how they're going to manage their cyber risk and then increase the cyber resilience of the business. And of course, all of this is achievable with the click of a button. And because the nature of cyber risk is so dynamic, often we see clients wanting to run a quantification, could be regularly, could be on a monthly basis, quarterly basis. Essentially, we call it on demand, because sometimes you never know when you want to understand where you're standing. And so that's what this program, this product allows. And this is where we think that healthcare executives will benefit from it, when there are events that are occurring and you want to have that insight of where you're standing. So with the click of a button on demand, you can have that insight. And that will, by the way, just to be clear, take all of the data at that point in time, the freshest view of everything that's happening in the organization, the subsidiaries that you're analyzing, all of the data that's happening in the threat intelligence landscape, and all of the updated models and events that we model. And it will give you the freshest view of where you're standing at that point in time, taking into account all of the current realities that exist in the world. So with that, you can see, therefore, how we can then meet, the final part, or help you meet and support your approach to meeting those HIPAA requirements, and rationalize them and reason with them, and feel confident that actually you're not just meeting the regulation, but actually you're establishing a very firm, formidable, and robust cyber risk management strategy. So there we have it. All of the different components met, and I've talked you through how a data-driven, technology-led approach can help, and the importance of financial quantification. So in conclusion, we believe that there is a shift occurring, and that shift is moving from a cybersecurity-centric approach into a comprehensive cyber risk management approach. We believe that the key to unlocking this and the importance will always revolve around being able to financially quantify and communicate, your key cyber risk decisions. And of course, we've tried to show you how you can adapt the way you're currently establishing, a more cyber resilient business to help you meet different regulatory or other requirements, for example, the HIPAA security rule. Thank you very much. We've really enjoyed having you join our webinar. If you're keen to get started on this journey, please feel free to click the QR code or to email or call us at Cover, and we'll be happy to initiate a free ransomware analysis for you and have a broader range of conversations and answer any other questions that you have. Thank you and have a good evening.